banks look the best in our understanding, accounting for roughly about nearly more than a third of profit in India and not even a quarter of your market cap as banks only. So banks don't appear to meet price to perfection, whereas the other side of the market, ex-BFSI, appears to be priced much beyond perfection and is also witnessing earnings downgrades. To the question around IT, we definitely like IT sector right now. It's one of our second best ideas when we are advising our investors on asset allocation. That after banking, it should be IT. We're overweight in our good and clean portfolio on the IT sector because in times like this, where earnings across the country are becoming a question, if you look at the September quarter numbers or expected downgrades for December, IT seems to be holding up. Perhaps the downgrades had happened much earlier. So perceived quality sector, more towards the US, which perhaps could go through a slightly better economic times. We believe IT could be the second best sector after that. FIs seem to be coming back in India in the last 2 weeks, and they've also given thumbs up to a little bit to FMCG or real estate, though FMCG is going through earnings downgrades, not our preferred asset allocation sector right now after banks and IT. Those two will be the larger ones, perhaps followed by healthcare and some bit of metals.
Okay. You're also underweight autos, which is 7% of GDP, 8% of exports in India, a key employer when it comes to jobs in the Indian economy. And so what's the outlook here in terms of the downtrend that the sector is seeing? Of course, they've hiked prices, so I know that they're trying to defend margins. But at a time when the world is moving towards EVs, what's the outlook for traditional automakers?
So, unlike the world in India, ICE, the traditional, dominates both passenger vehicles and the two-wheelers right now, though we are seeing success of Ola listing and a few other brands in India. So there is a rising adoption in the urban markets for EV. It's early days because of the pricing, what's the product priced at. It'll take some time for the EV penetration to be of that nature in two-wheelers, what we have seen in China. But on the larger question of Indian autos had a dream run for the last 2-3 years, perhaps even 4. They account for nearly 10% of the entire Nifty's market cap, or let's say market's market cap. Right now, they're holding up since then. But this year, we are seeing consumption coming under pressure. Though the festive seasons did report a good volume uptick for a month or two, but otherwise, for volumes as such in India, it's becoming difficult. It's only the top end of the brands which are holding up really well. Premiumization is a trend in India which continues, and pricing is required for penetration. Perhaps premiumization is helping them on the margins. We like particularly only a few companies in this space right now, let's say a Mahindra and Mahindra, which has followed up with some good EV launches, rightly priced, hopes around tractors, improving capital allocation. But beyond that, we find most of the stocks richly valued, even the one which was got listed, the Korean Hyundai,